It's time to do 55 minutes of business. That's what we do on Business Incorporated. Here's what we have prepared for you on the program. Manufacturers in Zimbabwe are counting their losses as power cuts intensifies. A lower growth forecast is what South Africa is having. It now at 1.1%. And the International Monetary Fund has approved the disbursal of 78.3 billion shillings for Kenya. You're welcome to the program. I'm Ini John McQuarrie. We start from the global space as usual, starting with gold prices that climbed to another record high today, Thursday, and we're headed for their best month in 7 months on safe haven demand ahead of the United States presidential election, while investors are awaiting U.S. inflation report for clues on the interest rate path. We look at the numbers right there. We see that spot gold is now $2,786.89 per ounce after hitting a record high of $2,790.15 earlier in the session. Prices have firmed 6% for the month so far, while U.S. gold futures dipped 0.1% to $2,797.80. The election, that's on November 5, has entered its crucial final phase, with opinion polls indicating a close fight to call a winner between the Republican former U.S. President Donald Trump and Democratic Vice President Kamala Harris. Look at other metals at this time. Spot silver down 0.3% to $3.68 per ounce. Platinum was flat, while palladium fell 0.6%, and all three metals were on track for a monthly gain. We look at manufacturing activity in key metals consumer China. It expanded in October for the first time in 6 months, according to a survey that has been shared by official platforms, and that supports policymakers' optimism that recent fresh stimulus will get the economy back on track. Global oil now prices rose on Thursday, extending the previous day's rally, driven by optimism over the U.S. fuel demand following an unexpected drop in crude and gasoline inventories. I look at the numbers right there. We see Brent in the green, 0.5%, $72.90 a barrel. Same with WTI of the United States. It's up 0.5%, $68.93 per ounce. And we know that at the close of trade on Wednesday, both contracts went up more than 2% after falling more than 6% earlier in the week. That was on Monday. U.S. gasoline stockpiles fell unexpectedly in the week ended October 25. Now, OPEC is back in the news, moving the market numbers now. They could delay a planned oil production increase in December by a month or more because of concerns over soft oil demand and rising supply. The group is scheduled to raise output by 180,000 barrels per day in December, but they had already delayed the increase from October because of falling prices. We come to Nigeria now. The Cross River State Governor, Mr. Basio II, has proposed 498 billion naira for the state's budget. That's for the fiscal year 2025. He was speaking at the presentation of the budget at the State House of Assembly, and the governor explains that the proposed budget, tagged the Budget of Sustainable Growth, earmarked 328 billion naira, beg your pardon, that's about 66%, and as capital expenditure, and 170 billion, that's about 34% for recurrent expenditure. He's assuring citizens that his administration's policy preferences are meant to snowball into the common good of the people. The governor also thanks the leadership of the State House of Assembly for building a common consensus among members to cooperate with the executive and judiciary arms of government to achieve a prosperous Cross River State.
It is therefore in the spirit of the shared values of commitment, stewardship, and communal prosperity that I present the 2025 Cross River State Income and Expenditure Forecast for your perusal and subsequent approval. Mr. Speaker, the unfavorable economic climate prevalent in the country, occasioned by the devaluation of the naira for unprecedented 3 consecutive times within one fiscal year, coupled with the floating of the exchange rate, have impacted negatively on the projects, programs, implementation by the state government as contained in the approved chart of accounts. This economic downturn did not spare the private sector either. Consequently, the initial budgetary provision for specific projects needed to be increased owing to both the cost push and built-in inflation. To maneuver this stormy economic weather, we have to scale down on the number of projects earlier earmarked for implementation. And in doing this, we prioritize very critical sectors that have direct an impact on our citizens. Besides the huge data for the 2025 fiscal year, we have proposed a total budget size of 498 billion naira only.
Wares and beauty products made from local ingredients and raw materials were the focus at the second day of the United Nations Tourism Congress that's still holding in Freetown, Sierra Leone. Following the theme of the event, women have been given priority in showing their goods. The United Nations Tourism Congress opens an exhibition on the second day of the event. Women who have turned mostly local raw materials into products have the floor. Beauty and fashion top the list of products, and the women say the visibility here has a lot of potentials.
Being disabled woman, I've been doing this for quite a long time, but I've not been having this kind of platform to showcase my business outside there, so the limitation has been seen. But coming to this exhibition, I've seen a kind of improvement and people that have used my product outside, because I used to hack my products on the street and all. Okay. And of course, you can see now I'm holding crutch, so the mobility is difficult. So for me to have such opportunity to come out here to showcase my business, it's a great success.
The networking is amazing. Like, I've met people from different regions. I've met some old customers. I've made some new customers. So I'm really thankful for the ministry for putting this together. It's amazing. I mean, just putting women out there and showing us, that we can collaborate and how things, can be done.
We're quite impressed with the output.
Nigeria's former Minister of Information and Tourism, Mr. Lai Mohammed, has been attending the Congress and is happy with the approach adopted.
Yes, we're here to discuss, women in tourism, beyond empowerment to education, finance and innovation. And I have found the entire 2 days so far very exciting, informative, and it shows the real potential of women in tourism in Africa in particular.
The Ministry of Tourism and Cultural Affairs of the Republic of Sierra Leone is also using this event as an opportunity to showcase the country's way of life. I bet there's a lot of fun going on in Freetown, Sierra Leone, and a lot of businesses also happening. Now, let's come back to Nigeria. Now, despite ample supplies, petroleum products and marketers, we've heard a lot coming from there, from the president of Aliko Dangote Industries, when he went to meet with the president, asking marketers and the NNPCL to come buy his products and to stop importing. Of course, there have been reactions after that. If you watch a sister program, Sunrise Daily, you had Ipman coming there to say, well, they have been attempting to buy petrol from Dangote refineries, and they've had to wait 4 days or so on the road. So it's important that we do clarify this, even though I think the latest perspective now is that filling stations or petrol stations now are empty. The increase of price, of course, the latest one, that makes petrol at least 1,020 naira in Nigeria, and that's in Lagos for NNPC filling stations. Well, that seems to have reduced the demand for it. I don't know, but let's get to the matter right now with Mr. Calvin Emmanuel. Mr. Calvin Emmanuel is an economist, joins us right here in the studio. Good to have you in the Lagos studio.
Good.
Not a usual sight, but it's good to have you here.
Thank you so much for having me.
So, I mean, I know that you do a lot of research into all of this, the petrol consumption, petrol availability, crude. And I mean, Mr. Dangote did not mince words when he did say that he has products, he can feed the nation, but his products are not being taken off him, and it's even costing him money. What do you know about all of this?
I'll tell you what, I'll say NNPC today, like you said, is in dire need of engineers and not expert traders. NNPC, midstream, upstream, downstream, has more traders than you have engineers. NNPC's major work is in NUPIMS, upstream petroleum investment services, and E&P. That's their bread and butter. It's been my personal opinion that NNPC retail should not be. NNPC should focus on upstream and midstream. Okay? So, for example, you have Dangote Refinery currently doing 32 million liters per day of PMS. It's currently at 425,000 barrels of crude oil capacity utilization. 60% of the crude oil feedstock it uses daily is purchased in US dollars. Even the current Naira-based crude oil sales, only about 4 cargoes has been delivered for the month of October. Okay? NNPC does not have pipeline infrastructure. Now, Nigeria has 5,001 kilometers of multi-product pipeline, gas gathering, transmission, and distribution. Gathering is taking crude oil feedstock and gas from wellheads to flow station terminals, flow station points, gas gathering and crude oil gathering points. Transmission is taking it to terminals. Distribution is midstream and downstream. You have the Atlas Cove and Musimi. Yep. You have the regional storage distribution company that was allocated to 4 zones: Kaduna, Musimi, Warri, and Port Harcourt, under former PPMC. So as we speak today, Musimi and Atlas Cove, that should be like infrastructure for taking PMS from Dangote, is not available. So you have all kinds of costs. But now, let's look at it. Number one, why are the marketers not taking PMS from Dangote? In September, they imported 1 billion liters or 814,000 metric tons. In October deliveries, they did about 242,000 metric tons or 352 million liters. Why are they not wanting to stop? There were offshore blending agreements, take-or-pay blending agreements in Central Europe, where you transship off-spec petrol gotten from refineries in Russia. Russia is under an oil price cap because of the Russia-Ukraine invasion, sanctions. So it's strategically cheaper for you to buy off-spec in a country like Russia, send it to a blending plant in Central Europe, and when you cure it with naphtha condensates, you put it in another vessel so that you don't get sanctioned by international community. And this is what has always happened. And people have been benefiting from arbitrage, because it's been my personal opinion that the landing price of PMS in Nigeria does not reflect the dynamics that goes into the inputs for calculating PMS purchase, blending, and transportation to Nigeria. So it's a widely beneficial business for these marketers to run the model they've always operated, to import products into Nigeria, than it is to buy from Dangote, because under the Dangote framework is more transparent. The government sees it. I'll tell you, people, the number one question on the lips of Nigerians today is, why is Dangote not able to tell them the price? And I say this all the time. The pricing mechanism for PMS is not as straightforward as people think it is. Okay? What typically you have is NNPC just comes and says, this is our landing price, and then the government takes it. But let's break it down so that we can answer the question that people have always asked. What is the price of PMS? It's dynamic. Number one and the most important component is Platts. Platts is a global system for gasoline pricing. It also works for LNG, it works for LPG, it works for crude oil. It's a global system used by all the refineries around the world. Yeah? Platts depends on the price of crude oil, the location of crude oil, the grade of crude oil. There is the heavy, there is the medium, there is the light grade. Nigeria has a light grade crude oil. When Aliko was importing crude oil, it was importing heavy crude from North and South America. Yeah, but now most of the crude oil feedstock, gotten from companies, operators in Nigeria, most of which is purchased in US dollars, are actually sourced within Nigeria. Yeah, that's Platts. So basically, if, for example, your Platts system that is currently moving up and down on a daily basis is at $700 or $750, you divide it by 1,341 liters per metric ton to get your raw price. Then you have a premium. Premium is the additional costs that a refiner has because of the grade of PMS that is producing. Dangote is producing Euro V 95 to 97 research octane number that's accepted anywhere based on American Society of Testing and Material. It's a globally acceptable grade that any regulator in the world can accept. So the grade of PMS that he's refining in Lagos can be used in the UK, can be used in the EU, can be used in America. Is way better than the imported PMS.
Okay, so let me ask this from your explanation. Are you saying, because everybody is in business to make profits. Dangote is in business to make profits. The marketers are in business to make profits. So are you saying that the structure that we have in the value chain, the petroleum value chain in Nigeria, it's more profitable for an individual or a business to import petrol, PMS, into the country than, purchasing from a domestic refiner?
It's more profitable because the structure of calculating the landing price is fraudulent. That's what I'm trying to explain. So the arbitrage opportunity favors them, and because they are not going to make as much arbitrage as they usually make from the importation of PMS, this is the reason why they are complaining. If not, Dangote has, like you said, 500 million liters of PMS stored in Lagos. Why are they not taking products? Last week, 79 million liters was shipped from Lekki Refinery to Apapa. Yes? And they've taken about, I'll say, a little over 200 million liters within the last month from Dangote Refinery. He has enough. He's doing 32 million liters a day. It's more profitable for them, but his price is cheaper than the landing price that they quote for the PMS landing into Nigeria. Because at the landing price of over 1,100 naira per liter, they were collecting an under recovery from the government. And that's the reason why NNPC wasn't able to remit any money to the government. NNPC seized the revenues that were due to the Federation account from NLNG. Because NNPC is a nominal shareholder on the board of NLNG. NLNG paid over $600 million in dividends for 2023 financial year. NNPC as a nominee shareholder seized it and refused to remit that money to the Federation account, which is another subject entirely. They've not been able to remit any this thing to the Federation account based on what the PIA says. In 2023, the records show Nigeria produced 537 million barrels of crude oil. That's down from 800 million barrels they were doing about 10 years ago. That's crude oil fiscalization production stock. NNPC said they lifted 196 million barrels of crude oil. Yeah? They were supposed to lift 275 million barrels of crude oil. Number one, why are they not able to supply Dangote with the feedstock he needs? Number two, why are they not able to earn enough dollars
I'm sure
to remit to the government?
They have other responsibilities and all of that. But so staying on this now, so where do we go from here now? We have heard there's no more subsidy, which takes NNPC off. It's supposed to take them off the value chain. You understand? So, and we have heard announcement that marketers can actually buy directly from Dangote. So why are we still having all of these conversations?
The marketers use the inventory system of NNPC. Okay?
Although Ipman had said that they do have some funds with the NNPC, I think that they were supposed to have been done with that obligation, but they are not at this point. Maybe is that what I think about 4 billion or so? Is that what we're waiting for before the marketers can directly get products from?
To be honest with you, I don't know why, following the directive of the Federal Executive Council that they are obeying Sections 205 of the Petroleum Industry Act to deregulate downstream sector for petrol, why Ipman is still going to NNPC or working under NNPC's inventory management system. Because they in all the controversy I've seen and all the interviews I've watched so far that members of IPMAN and the president has granted. I'm surprised. He says that he's not able to get. Dangote is in Lagos. Go to the office in Lagos and discuss a commercial framework for collecting products from the refinery. The refinery is open for. In fact, recently at the OTL conference, downstream conference in Lagos, the Ghanaian regulator says that Ghana uses about $4.8 billion in import products from Rotterdam and Antwerp, and they are considering doing backward integration by 2025. To take products from Lagos, because Lagos to Accra, the coastline is shorter and the fees are lesser for them to ship from Lagos the grade than to bring from Europe. So if Ghana is considering taking products from Nigeria, why is IPMAN saying that he cannot take products from Dangote? There's something wrong there, and it's definitely not Dangote's fault.
All right. Well, it looks like it's something we would have to continue discussing and bring into the limelight, and hopefully one day we would have an answer, to all of this. But thank you so much for your time.
Thanks,
Economist Kelvin Emmanuel for joining us in the studio.
Thank you for having me.
Welcome back to Watching Business Incorporated right here on Channels Television. And now we head to the market to look at the market numbers. We see trading day Africa, Nigeria in the green, but not so slight. But the good news is that there's been a recovery back to the level, 98,000 level. I guess based on the results, some good and not so good results have been released. MTN is one of those released today, and I'm sure by the close of trade today, we'll see even more. Let's just stay there first and speak to James Adisa, is an industrial analyst with Chapel Hill Denham, to tell us how much impact the results are having on the market numbers at the end of the day. Hi, James. Good afternoon.
Hi, thank you for having me today.
Yeah, so we saw, I think, two negative close yesterday and the day before. Now we see this recovery. We are seeing more results. Can we connect this recovery to the results that have been released?
Yes, so in some way we can, because we've seen positive results from the banking sector. We've seen some of the tier one names release strong results like GTCO. Profit before tax was over $1 trillion. Um, and so in some way that has driven the positive sentiments in the market, towards that sector. But we've also seen that for like Aradel that has lost about 10% today already, their results were quite strong. They even announced a dividend of around 8 naira per share. And we also saw positive news flows around the Renaissance deal, which was expected to sort of translate to positive sentiment for the stock, but we're still seeing sell-offs in that name, and it's largely because there was a massive rally in the stock, and now we're seeing some of the investors in that name trying to take some profit because of the massive rally. The market isn't able to absorb all the sell-offs, and so we continue to see the stock trend downwards. So that has in some way dampened the positive sentiments that we've seen in the equities market.
Market closing today with all of this?
So as at the last check, I think the ASI was down about 52 basis points. And, if we continue to see sell-offs in some of the bellwether tickers, we could see the ASI close in the negative terrain. But all in all, I think the banking sector, the financial services has been positive. We've also seen some of the manufacturers, the FMCGs, that have been able to take out some of the FX debt, and that has weighed heavily on their results and eat into profits. We've seen some of them clear that debt. And so, we're seeing some positives here and there from the consumer sector also, and also some strong earnings in the oil and gas sector. So I think overall, we should expect that investors will begin to start positioning in some of these names that have given clear indications of closing the full year 24 strong. And if that materializes, that could be a catalyst for a positive return in the equities markets.
All right. Well, we hope that the month of November, we're still going to do a review of the month of October, but we hope that the month of November will be more certain or stable in the green path. But thank you so much, James Adisa, industrial analyst at Chapel Hill Denham, for your time this afternoon.
Thank you for having me.
All right, we look at other markets now. Other parts of Africa, we see for Egypt, they're in the green, almost 1% at 30,654.99 at intraday, but Nairobi closed in the red, but still they still have a bit of profits when you look at the numbers from their previous close yesterday. So at 118.73, that's for Africa. Let's look at other parts of the world. Middle East is the red market, building on yesterday's red. Today, Dubai was not able to escape that. So they're in the red, 0.33%, 4,589.15. Abu Dhabi follows suit, 0.17% at 9,312.06. Other parts of the Middle Eastern markets is Tadawul, red, slightly red, and then Qatar, the only green for that region for today at this time, 10,499.33. From there, we move over to the United States and see that stock features. There you have Asia first. Nikkei also looking so red. The Nikkei is down 0.5%, 39,000, 0.8. But you notice that it's recovered a bit from the 38,000 level. So now at least it's 39,081.25, even though it lost a bit, about 0.5% there. Kospi is also in the red. The close of trade, Shanghai is the lone green for that part of the world, 0.42% in the green at 3,279.82. And then Nifty of India is also in the red, 0.59%. For the United States, it's also red, even though you have fresh batch of earnings from mega cap technologies and all of that. But the Dow Jones we see in the red, the S&P 500 and the Nasdaq also in the red. Losing some of those positives I had because it's down more than 1%. at this time. This is the features also. So we'll see what happens when the market opens. But in after hours action, Meta, they lost about 3% after missing the street's expectations for user growth and warning that capital expenditures will rise in 2025. For that deterred investors a bit. And so we saw that Meta dropped more than 3%. Microsoft's revenue guidance also disappointed investors, dragging shares down nearly 5%. So that will see Nasdaq losing more than 1% in the futures trade. Now let's head to London, and we know yesterday was that big budget speech, and I think a lot of knocks have been coming the way of Ms. Reeves after that speech, because you had a lot of introduction taxes, even though it's supposed to be focused on investment. A lot of people are saying it's going to weigh down on wages of workers. But anyways, let's have Juliana joining us now to give us reactions to that speech, since it was given yesterday. And I know she has even more information from the speech, some of those new introductions and all. Juliana, good afternoon.
Good afternoon, Innie. Goodness, there was so much anticipation building up to Rachel Reeves' statement yesterday. 24 hours ago, she stood at the dispatch box. Quite a historic moment, of course, because she was the first female in 800 years, Innie, to deliver the budget. And I've got to say, the morning after, there has been a slew of criticism. In fact, the reactions are still coming in thick and fast. I suppose it's probably best speaking about the most broadest reaction, which has come from the International Monetary Fund, who, of course, Rachel Reeves sat with last week in Washington when you were there, Innie, at the annual meetings. And the IMF have praised the budget. They said that this is a good thing that Britain is investing in its public services. In fact, I think over the past 3 years, particularly since the pandemic, the IMF have always urged the UK to invest more in its public infrastructure. And that's exactly what Rachel Reeves plans to do. That's what she spelled out in the budget yesterday. But the only thing is to build Britain, to build back Britain, going back to kind of wartime, the UK after World War I and World War II, which is, believe it or not, is how this budget has been described by the media, building back. It's going to cost some money. And in fact, we know that it's going to cost about £40 billion, because that was the increase in taxes announced yesterday. And I suppose that's where the flurry of criticism comes in, because it's not just the wealthiest who are going to be paying for this slew of investment across roads, rail, and education and the NHS. It's also the working people who are going to be paying for this. And that is the major cause for concern this morning, particularly amongst Labour supporters, because they don't know where these tax rises have come from. In fact, even though yesterday, Innie, it was Rishi Sunak's last day as the leader of the opposition. Of course, he was Prime Minister. He was, of course, Chancellor. But on Monday, we are going to find out who the new Conservative leader is. But, you know, he was trending all across social media yesterday because he said, look, you know, the Labour Party lied. Bookmark this tweet. He showed a tweet that he put out months ago during the campaign where he said, I can guarantee you Sir Keir Starmer's going to raise taxes. The Prime Minister said he wouldn't. And alas, we've got £40 billion worth of tax rises. Mostly this is going to come from capital gains tax. So the richest who've got money, they're going to see their taxes go up. Also as well, something mostly for our viewers in Nigeria who have children privately school educated in the UK. I believe from April, they're also going to be paying an increase. They're going to be paying 20% on school fees. That is a huge one. There is also going to be an increase on taxes in inheritance tax, air passenger duty. The amount at which you start paying tax in the UK is now going to be frozen for a couple of years. Therefore, more people over the years are going going to fall into that tax threshold. So that makes up that 40 billion. And even as I'm speaking to you now, the Prime Minister and the Chancellor are speaking live on TV, trying to reassure voters that they haven't lost their trust, that they want to build back Britain. And it's going to cost, right? Nobody wants to spend to build, but that's exactly what you've got to do. You've got to find those savings. And this is the risk that Rachel Reeves has taken. There's also been some criticism and attacks on her financial plans and this new fiscal backdrop by her predecessor, Jeremy Hunt, who, of course, was accused of leaving that £22 billion black hole in the first place, which is why Rachel Reeves has said she's had to do this. He has said this morning that we're going to have lower living standards, higher prices, fewer jobs, more expensive mortgages, and life is going to be tougher for ordinary people. There is still so much to go through. Again, this is the first time we've heard from the Labour Party about their fiscal plans in over 14 years. And it wasn't just a once in a 14-year budget. This was a once in a lifetime budget. Everybody living in the UK will feel the effects, some way, shape or form, of what was announced yesterday. But it is going to take a long time for us to actually dissect what is happening. There are some bright spots, one of them being that the national minimum wage has now risen, I believe, to about £12.11 an hour. That is a good thing. But there have been businesses on British Airways this morning saying they just can't afford it. They can't afford to pay their staff more because their business rates are going up. There's also a new increase in the amount of national minimum wage, national insurance, I must say, that employers will have to pay on an employee. So it's basically going to cost more to keep your staff. So businesses feel that they've got the short end of the stick here, particularly as they suffered so much from Brexit. So there is so much more, lots to go through. I've been speaking to significant figures this morning, and that will all be out tomorrow, transmitted at lunchtime on Channels Business Global, where we'll have a full dive, a deep dive into how this is going to affect Brits, particularly Nigerians living in the UK, who, of course, have been here working within the NHS, working within the city, and our students who are studying here. So lots to go through.
Yes.
Lots to go through, Inne.
Yes, a whole lot, Juliana. And I'm so glad that you're going to have that full package. And I know that you will emphasize the part about Nigerians, seeing that a lot of Nigerians are there, especially for school and all of that. That's going to be an interesting one to look out for. But I do hope that, trusting the government there, perhaps some kind of buffer to help those in the very low parts of the cadre may come up, very soon, as they did before when it came to electricity and all of that. So we'll keep our fingers crossed on that and watch out for the full episode that you have for us tomorrow. But let's see investor sentiments at this time, Juliana.
Investor sentiment, Innie, not great, actually, as they're still dissecting what is happening in the UK and the risk and the gamble that Rachel Reeves has made. So at intraday, the all share is down. It's in the red, down 0.71%. FTSE 100, the blue chip index down 2 Innie at 0.70%. In the FTSE 250, the domestic market, that's down by 0.1991%. In the currencies market, the British pound is trading up against the US dollar by 0.28%, up 2 against the euro by 0.14%, but down against the Japanese yen and intraday by 0.35%, Innie.
All right, Juliana, thank you so much. So we go across from UK to Eurozone, where the economy grew there more than expected during the third quarter, and that was largely because of the German economy, which grew unexpectedly and dodged a recession. We've been talking about the recession. Let's get details now from Chiponda Chimbelu. Hi, Chip. Tell us more about this.
Thanks for having me. Well, the Eurozone economy grew 0.4% from July to September, and that is double market expectations. And of course, the big surprise was the German economy, which dodged a recession narrowly. It grew 0.2% during the third quarter, and that, of course, came on the back of higher consumer and government spending. Now, France, the EU's second biggest economy, also had better than expected growth. But there is some concern that France's performance, which was boosted by the Olympic Games, was a one-off. Now, back to Europe's biggest economy, Germany. While the third quarter figures were a positive surprise, the latest official data also shows that the second quarter of this year, which ended in June, Germany's GDP actually shrank more than was previously estimated. It declined 0.3%. So it is a case of one step forward after two steps back for Europe's industrial powerhouse.
Now, so how should we read these numbers?
Well, at best, Germany's economy is expected to stagnate this year, and that is according to the German Chambers of Industry and Commerce. That would mean that 2024 would be the third consecutive year without real GDP growth. Germany is facing a cyclical and persistent structural crisis, and that is largely due to too little investment, a lot of red tape, and excessive costs for doing business. Now, that's what the Chambers of Commerce and Industry say. And the German auto industry, which was, of course, once a source of pride and success, is struggling. On Wednesday, Volkswagen, which is Europe's largest car maker, announced that its profit tumbled 64% in the third quarter. And what is interesting to note is that service sector economies in Europe are actually performing better than manufacturing ones. And that is why, of course, also Spain, which is Europe's, or the EU's rather, fourth biggest economy, is growing faster than France, Germany, or Italy. The Spanish economy, of course, relies heavily on tourism.
All right, let's look at the markets now. What's going on there?
Well, European stocks are expected to trade slightly lower, and that comes after Microsoft and Facebook owner Meta disappointed with their earnings and weighed down U.S. markets on Wednesday. Now, Microsoft, which has forecast slower growth for its cloud business, has put investors on edge. They are now uncertain about what Amazon may say about its cloud business revenue during its earnings report today. And tech giant Apple will also be reporting earnings during the day as well. And here in Europe, banks, that is, of course, including BNP Paribas and ING, will be reporting as well. And in terms of economic data, we will be getting Eurozone inflation figures and unemployment. Now, that could, of course, provide some hints to traders on whether the European Central Bank will accelerate interest rate cuts. And in the US, the personal consumption expenditures price index is due. And of course, that is the Fed's preferred inflation measures. So investors will also be keeping an eye on that. And of course, also US initial jobless claims figures.
Yeah, a lot of things to look out for, Chip. Thank you so much. Now we come to Africa, where the Executive Board of the International Monetary Fund has approved the disbursement of 78.3 billion shillings, that's about $606 million, to Kenya as it struggles to pay off debts and boost taxes after mass protests led to financial reforms being scrapped. Kenya is considered an economic bright spot in the troubled East African region, but it's grappling with around $80 billion in external and domestic debt, and interest payments are eating up 2/3 of its annual revenue, more than it bills for health or education. From there, we go to Zimbabwe. It's another aid for them. The European Union has extended 75 million euro, that's approximately $81 million, to Zimbabwe as part of its efforts to help the Southern African nation address the impact of climate change and foster socio-economic development. The agreement was signed in Harare by the Minister of Finance, Economic Development and Investment Promotion, and the EU ambassador to Zimbabwe was also present. This funding represents the second phase of EU's 148 million euros, that's about $160 million allocation to Zimbabwe's multi-annual indicative program, that's supposed to run from 2021 to 2024. Still in Zimbabwe, local manufacturers are grappling with severe power cuts lasting over 18 hours daily, forcing them to rely on expensive diesel generators, which significantly increases production costs. Zimbabwe requires about 1,700 megawatts of electricity during peak hours, but the state-owned power utility, ZESA, was generating just over 800 megawatts on Wednesday. The Confederation of Zimbabwe Industry, the country's largest business lobby group, describes the situation as dire. Let's discuss onions now with Rosemary Adibe, analyst with Financial Derivatives Company. And, well, it's one of those little but important condiments that you need in your cooking. We say prices have surged by 76%, rising to 150,000 in October from 85,000 the corresponding period. I wonder if people are doing without onions now in their cooking. But let's have Rosemary tell us what FDC has observed on this. Hi, Rosemary. Good afternoon. Are people looking for ways to do without onions? After all, you can cook without it.
Thank you for the question. Onions is a staple ingredient in many Nigerian dishes like soups and stews. And we do see various factors affecting the price of this commodity, but still people are using this ingredient in their various dishes because they are just so used to it, despite the increase in the price of this commodity. And like there are various factors that have affected the price of this commodity aside from seasonality. We are supposed to be enjoying the benefits of ample harvest because onions are typically harvested within two periods during the year. We have the dry season harvest and the rainy season harvest. The dry season harvest is between January to April, and the rainy season harvest is between August to October. But the quality and yield from the rainy season harvest compared to the dry season harvest is not so great because the rainy season comes with more rainfall and the soils are more waterlogged, which opens room for pests to affect crop quality and yield. Also, the fact that Kano, Sokoto and Kebbi and other northern states were drastically affected by flood, with Kano, which is the highest producer of onions in the north. The flooding affected about 226 communities across 27 local government areas in the state, and this affected thousands of farmlands, which created scarcity of this commodity. And with increased scarcity, we see an increase in the price of this commodity, and as well as increased transportation costs, because over the last 2 months, we've seen 3 increases in the price of petrol. This increases logistics costs for farmers moving this commodity from farm to market, and even middlemen as well. This goes forward to affect the final retail price of this commodity. But still, consumers are still purchasing this commodity because it's a staple ingredient that most people cannot do without.
Thank you so much for that. I guess the demand is still there. It's an essential. Thank you so much, Rosemary Adibe.
Thank you for having me.
Now we head to South Africa, where the Finance Minister, Enoch Godongwana, has emphasized that the country continues to face significant financial challenges despite some positive economic indicators. This year, the National Treasury has lowered its growth forecast for 2024 from 1.3% to 1.1%. Sir Godongwana stresses that the need to maintain the current fiscal course, which will involve making tough decisions regarding budget cuts and spending, is also highlighting ongoing concerns about the country's debt levels. Let's head to the crypto space now and see what Ladi has for us. Hi, Ladi.
Hi, well, Bitcoin, month of October, I guess you can call it October for Bitcoin, did about 12% gain. That's for the month, but Ethereum didn't do as well, about 0.15%.
I thought they always had
that correlation.
Yeah.
I think that left this month. So even though we saw Bitcoin flying, Ethereum had to catch up, but was really, really slow. So for the market now, we see for the headlines, Brazil is mulling taxing stablecoin remittances. You see, the Central Bank of Brazil is looking to capitalize on the popularity of stablecoins in Brazil, and is now examining the possibility of taxing stablecoin-based remittances. Then we see BlackRock's IBIT seen a record $872 million inflow. That's according to data from Social Value. The 12 spot Bitcoin ETFs collectively recorded $893 million in inflows on October the 30th. An amount second only to the 1 billion inflow recorded on March 12th. Then we also see MicroStrategy. They're looking at ways of getting more Bitcoin into their holdings. So they're looking at pulling funds from different areas to buy up more Bitcoin to add to their holdings. All right, let's bring in Rume Ofi now, financial market analyst. Hello, Rume.
Hello, good afternoon, Larry.
Good afternoon, Rume. So definitely a positive performance for Bitcoin, up over 10% for the month. And we're seeing MicroStrategy, trying to buy up more Bitcoin. They're looking for funds to buy up more Bitcoin. How are you seeing that?
I think it makes a whole lot of sense regarding what is going on in the market now. Everyone is looking at the possibility of stacking more Bitcoin right about now. And it makes sense that this industry is where the world is headed. And I have no doubt in my mind that this is the reason why the institutions are actually going for this. But again, I also see the excitement around the ETFs from the institutional investors, rightly seeing BlackRock doing some good work there, and a couple of others leading there. I think that has actually propped us up towards the, ideally to say October somewhat, even though we didn't start on the good note. But what I'm thinking is it's not to just be all excited about, because we just gotten started. Like this is just the beginning of the bull market, and the signs are there. We can see some possibly shake off to send the weak hands out, then possibly see something big more as time goes on, probably after the elections.
All right, so now that we have the Binance executive released, I guess we've laid that matter to bed. Everything good now, relationship between Binance and Nigeria?
Yeah, so there was a call between the United States president, 30 minutes call, and the Nigerian president, President Bola Tinubu, on this the release of the Binance executive, Tegran, and also we saw some of this partnership that has gone on between the various agencies, law enforcement agencies, for us to more or less saying this is the practical form of travel rule where exchanges usually share information, but in this time, the countries are going to be collaborating to share information on best practice, and for also people that are involved in some kind of shady deals to share information on Sing Street. So it's a very good end, if you say, permit me to say that it ended in praise somewhat, even though 8 months he spent in prison, but the partnership is worth it.
Okay.
And it's looking like something great is going to happen afterward with the US and Nigeria relationship in crypto.
All right, we'll keep tracking that. Thank you so much, Rume Ofi, financial market analyst. Thank you. All right, Tini, there you have it. I guess it should be all good now between Binance and Nigeria.
All good. I don't know about the all. I know good.
Maybe good.
Maybe good. But the all, I don't know. But thank you so much, Ladi.
Thank you.
All right, so that's it on the program. Thank you so much for being a part of it. We'll have a final one tomorrow, Friday, and it will be a full day. So do join me 10 a.m. That's when we'll start the journey for Business Morning, and then Business Incorporated at 1 p.m. But remember, you can always watch our programs on our YouTube channels.
Director, stop.
Waiting for you. I'm in John McCann,